It's the midweek edition of Business Morning. Thank you for joining us. I am Bisi Adebayo. Oil prices rallied further this morning, and that was lifted by a U.S. coronavirus fiscal aid package and a decline in crude oil inventories. Brent crude futures were seen around $51.24 a barrel in early trade, and U.S. WTI crude were also up at $48.21 a barrel. Now, analysts say that oil prices could gain strength as vaccination programs around the world begin next year, allowing countries to relax restrictions on movement and business activity. Meanwhile, U.S. physical crude oil grades strengthened on Tuesday as the API reported a decline in stockpiles. Crude oil stocks fell by 4.8 million barrels last week to about 492.9 million barrels, exceeding analysts' expectations for a draw of 2.6 million barrels. Now, it's been a bumpy year for the Nigerian banking industry following the implications of the COVID-19 pandemic, which disrupted a sharp start to what was deemed a brighter year for the financial institutions. Prior to the pandemic, the banking sector was faced with several issues, including a sluggish economy, a challenging operating environment, and other macro challenges which continue to place roadblocks on the sector's path. But the effects of the central bank's monetary policies also brought about some positive shifts for the banks. But let's get a comprehensive review of the bank's performance for 2020 and what to expect in the coming year. And I'll be speaking with the head of research and strategy at Greenwich Merchant Bank, Ayodeji Ebo. Good morning, and thank you for joining us on the program. Now, let's start with you telling us, giving us your overview of the banks generally for 2020 so far.
Yeah, thank you, and thanks for having me. I think 2020 has been, for the banking sector, been a very volatile year and also year of surprises for the banks. The bank started on a very strong note before the COVID-19 stepped in March. We saw there was that increased appetite by the bank for different products coming out around lending in the first 2 months of the year. But with the advent of the COVID-19 pandemic, the banks had to take a back seat. And part of what we also, that was very interesting that we saw was that the devaluation of the exchange, the official exchange rate was also positive for the banks. A lot of the banks had significant net dollar assets, which led to significant revaluation gains for most of the banks. Also, with the yield environment in 2020, yield opened an average for the bonds opened an average of about 11-12%, and it's already closing the year. Yes, though it's increased to about it went as low as 6-7%, and currently around 8%. So that also boosted the bank's balance sheet. I also like to touch on the business, the operations, which will also change. So for a lot of the banks that have been relying more on their online platform, it was a year where a lot of them reaped that benefit of investment in their online platform or their e-channel. So we saw a lot of the banks taking advantage of that because of the restrictions. So a lot of bank customers that were averse to using online platforms had to change their orientation, or did not have any choice than to adopt the online banking, which also was positive for the banks. So I think by and large it was a mixed year, but we also discovered that they were still, despite the challenges, the banks were still able to weather the storms. The FX revaluation gains gave them significant upside, as well as the gains from trading investment securities based on the interest rates environment. So we believe that for the banks, they've been able to weather the storm, and they remain strong.
Well, let's talk about their earnings now. When you consider the earnings from Q1 through Q3 2020, what for you are the most prominent trends in their results?
Okay, thanks. Very interesting. When we were expecting the Q2 results, we're all very apprehensive, and we were expected that we'll see significant drop in both top line, which is the gross earnings, as well as their PAT, their bottom line. But based on the yield environment and the exchange rate devaluation, that boosted the position for most of the tier one banks. So we saw growth in the gross earnings. If I look at it, if we take the average of the tier one banks, those still at single digit rate was around between 5 and 6%. And also looking at their PAT was also grew for the tier one banks, grew at an average of about 5-6%. And the line item that stood out is, you'll see, while interest income was almost muted, you would see that the fees and commission, where you also trace to the income from trading, increased significantly, so can save the banks from the lower interest rate. So you would recall that the CBN tried to, there was a policy on forbearance that a lot of the banks also took advantage of. And what that meant, or the implication of that, was that some of the banks had to give a moratorium, and some of the banks had to restructure some of the loan, increasing the tenors of some of those loans, and that would also reduce the interest rate that would be paid. So that impacted on the interest income. Another interesting trend that we saw was that there was significant jump in deposits. For most of the banks, what we traced that to was maybe the low yield environment for T-bills. So investors were not really keen in investing in government securities. They rather left that in the bank. So that led to that jump that we saw in the deposit on a year-on-year basis for the banks, looking at their Q3 results. But if you look at loans, it was for most of the banks that we looked at, therefore it was muted. Some even recorded a decline, which also shows that for some of the banks, due to the risk environment that's amplified, a lot of the banks were very cautious, and they were more focused on trying to restructure the current position that they have to minimize the impairment charges on these loans, or the non-performing loans on the total loan portfolio.
Well, we'll still touch more on the non-performing loans, but for now, how would you quantify the effects of the forex challenge, the CBN's adjustments, exchange rates adjustments, and the CRR debits, all in relation to non-interest line items in their results?
Yes, I think it was. It had its pros and its cons. For the exchange rate devaluation, where for most of the banks, they were long in FX assets. So for them, it was positive. Even for some of the banks, had swap arrangement with the CBN, which also helped their position. But for the reduced FX liquidity in 2020, that impacted on the fees from fees on FX transactions, because it's based on the frequency of transaction that you are able to earn the fees. So, but when you look at the income from the FX revaluation gains, that covered up for most of the banks. So for the banks, I feel that the exchange rate movement was positive for them, and however, in terms of frequency of transactions, that's reduced based on, if you recall, CBN also had to stop the supply of dollars for, I think, about 3 or 4 months, if I'm correct, and that also would have impacted on the FX or the fees that would have been charged on the transactions that would have been done within those periods.
Now, in terms of exposure to government securities, the banks were a major source of funding to government at the beginning of the year, but all that as the COVID pandemic set in change. Now, what do you make of such transition?
Okay, interestingly, I feel that for the banks, if the government securities were still a major, they were still, a lot of the banks were still heavy, they are still heavy in government securities. And if you look at the options that are available for the banks, though the interest rates that decline, so in terms of the return on, when you look at the yield on their investment securities, were moderated because of the low interest rate environment. But you also discover that within that the CBN had to review the interest rate on savings accounts from the normal 25% of MPR to 10% of MPR, which also boosted which would reduce the interest expense for most of the banks, and that was positive for the banks. So I believe that the checking when you look at the impact generally, it wasn't too bad for the banks.
Well, fintech has been a critical enabler for banks to respond to the challenges they faced during the pandemic. But how much cybersecurity risk does this pose to banks, looking at the fact that cybercrime is a global phenomenon?
Yes, I think for Nigeria, if we check even the banking system, we check the complexity of even our mobile app, our internet banking, we are way ahead of a lot of even the developed countries. So, yeah, while we can't rule out the issue of cybercrime, it's part of the risk, the operational risk of the business. The banks have emphasized more on investor or customer education to prevent a loss of funds by customers, and there are a lot of preventions, all those the two-way authentication that have also been put in place to prevent anyone just from accessing your account or having access to your card and sweeping your funds. So I believe that while they will have to, the cybercrime is not just peculiar to Nigeria. It's something we have to live with, but we also have to minimize. So, but with the online platform, that really has increased the transactions for customers. At least there was a bank they were able to, with the new platform they built, mobile app they built, able to drive deposits significantly in the third quarter by close to almost 20 or 30% in the third quarter. And that could be attributed to the mobile platform. And that is also, I'll look at it as positive for the banks in terms of fintech. We've seen banks now that they hardly open all their branches. They've discovered that they can still sustain their business, sustain their profitability by operating fewer branches. So gone are the days where it's based on the number of branches that you have or your physical presence. It's now based on how user friendly your platform e-channels are, and that's what I feel most banks should focus more on. They should focus more on the usability, also more intelligent apps that would even be able to. They should use more algorithms that will be able to propose different investment. One interesting trend that we saw towards the end of the third quarter, a lot of the banks now opting for the holding structure. And what we discovered that it's for most of the banks is to build an asset management base that would be, they will give them more flexibility compared to what you have based on some of the regulations within the banking system. But to even drive that, it's fintech, it's it's there to drive that business. So what we expect that would see is more deployment of resources into building more intelligent platforms that will be able to even recommend based on your risk appetite, recommend investment options for you.
Now, let's drill down on the NPL ratio. Of course, the NBS recently released the banking sector report for the third quarter, and it shows some improvement over the half-year data that was released earlier. What can you tell us about this difference?
Yes, I think on a quarter-on-quarter basis, that it's true that we increased, and you can easily attribute that in the second quarter of the year, the economy was in serious lockdown. A lot of businesses shut down, and when you are going to provide for it, when you are looking at your impairment charges, which is the probability of what you are able to recover, so a lot of banks had to make provision despite the forbearances. And we are looking at it based on the third quarter. Based on the opening up of the economy, a lot of the businesses also kicked off, and gradually for some of when you are applying probability of recovery for some of those loans, we saw that improvement in that reduction in impairment charges for most of the banks. But if you also look at it based on a year-on-year basis, impairment charges still remain high in double-digit growth on a year-on-year basis for most of the banks due to the risks that we have in 2020 compared to 2019.
Now, the oil and gas industry has definitely constituted a major challenge to the banks in the area of non-performing loans this year. Of course, that's mainly due to the pandemic. So what sort of exposure do you see the banks turning to this industry in 2021?
Okay, interestingly, despite when you look at the non-performing loans by sector, the oil and gas sector also accounts for the highest. I think is around, based on the proportion, maybe around 19 to 20%. But what would continue to see is the way our economy is structured. Most business activities within the oil and gas sector for most of the banks are a bit more comfortable with it. When you look at the value chain, whether you're looking from the upstream to midstream, you have less activity within the midstream, and you also look at the downstream sector. So for most of the banks are a bit more comfortable to lend within that space, and they also try to value to capture their risks. I believe that yes, it was a major shock when oil price dipped as low as $20 per barrel. But with what we are also seeing now with the improvement in crude oil prices, that would also help reduce the non-performing loan within that space. What I'd see in 2021, we expect that the banks will still remain skewed to the oil and gas sector because of I think the understanding of that sector as well as business activity compared to look at the other sectors. But we feel that should begin to change, because if we actually want to drive the economy, the manufacturing sector is critical, that we need to, especially the SMEs, we need to begin to see a shift to that, and to reduce that volatility that we see when oil prices decline significantly, because they are more out of the total loans to the oil and gas sector. The oil upstream space is still account for close to between 25 and 30% of that, which is also very significant and can be tied to the oil price.
All right, Head of Research and Strategy at Greenwich Merchant Bank, Ayodeji Ebo, thank you for your time, and we look forward to seeing you in the new year 2021.
Thank you for having me.
How about planning your finances ahead of the new year? Well, that's what we'll be talking about when we return. Don't go away. Welcome back. The coronavirus pandemic threw everyone on a loop in 2020. And as the year winds down, it's time to reflect, reset, and prepare for 2021. The end of the year provides a perfect opportunity for us as humans to do an evaluation of the year with a view to forge ahead in the new year, especially in the area of finance. And that's what we'll be discussing with the acting MD at Codrus Asset Management Limited, Mr. Gbola Aina. Good morning and thank you for joining us on the program. Well, just before we get into that conversation, I'd like to get your thoughts about the budget for the 2021 fiscal year that was recently passed by the Senate.
Good morning, BC, compliments of the season. So, like you rightly said, the Senate passed it last Monday, and we expect the president to pass it tomorrow, being the end of the year. I think the good thing is that last year they were able to adjust the budget cycle from January to December. These are something they've been trying to achieve, and the president is able to pass it tomorrow. That means the budget cycle from January to December is going to old sway, which is good. In terms of some of the budget assumption, oil price at $40 per barrel, daily production at 1.86 million barrels per day, 300,000 barrels per day, exchange rate of 379, GDP growth rate of 3%, and inflation closing rate of 11.95%. So, just to mention that this budget is like the biggest of all time, so it's 13.58 trillion. Last budget was about 10.3 trillion. The initial budget that was presented was about 13.05 trillion. The National Assembly had to adjust it by about 400 billion. They made mention that 350 billion for National Social Investment Program, and they also made about 100 billion for recovery. So, by and large, I think this is audacious. If the budget can be achieved, I think it's going to help the country come out from the recession that we are currently in it. I think the exchange rate of 379 maybe a bit low, considering the sort of pressure that we are facing in terms of exchange rate, and also inflation rates at 11.95. Also to mention that in the past, people have always advocated for the capital expenditure of the budget to be higher than recurrent expenditure. That's not the case now, but we're seeing a huge 4.1 trillion that's going to CAPEX, which we think is good. So by and large, I think if the budget can be implemented, I think it's going to help Nigeria at least come out of the recession that we are currently in at the moment.
But from an investor perspective, what are the obvious opportunities from the budget?
Okay, I think one thing that is notable is the fiscal deficit. So from the fiscal deficit, we expect government to raise funding domestically and also from Eurobonds as well. So that's going to provide opportunities for investors to invest in the debt market. We saw a lot of subscription in the debt market this year. We expect that to also happen next year as well. And like we mentioned in the past, we expect rates to begin to tilt up sometime in H2. So people are going to be able to at least buy some of those bonds at a slightly higher rate than what they're able to buy this year. So from the debt market perspective, we think there's going to be opportunities in the Eurobond space. So government raising sovereign Eurobonds, and also from the domestic market as well. So we expect to see a lot of bond this year, for 2021 rather.
Now, when you talk about budgeting now, is it, some see it as a fiscal responsibility, but should it actually be a fiscal responsibility, or should individuals also have a budget?
Yeah, so that's a very good question. I think budgeting cuts across everyone that has to do with finances. So the federal government, corporates as well, individuals as well. So if you have finances, that means you have income, you have expenses. You need to be able to plan your income and your expenses. Truth of the matter is that you don't always have the sort of income that you need to meet all your expenses, and that's where budgeting comes in. There are certain things you need to achieve, even from home front or even in channels TV, for instance. If everybody had all the means or you have limited resources, then there's no need to budget. So because individuals as well, you earn salaries, and salaries are not limitless. So you need to be able to budget based on the salary that you have, be able to plan your expenses and ensure that you're able to meet certain expenses based on what you're coming in. The ones that you can't meet, for instance. So how do you intend to meet those expenses? And really, that's what budgeting comes in. Benjamin Franklin said something. Said if you fail to plan, really you plan to fail. So budgeting cuts across everybody. It's not just a fiscal responsibility. I know a lot of times a lot of people blame the government, the government is not able to budget effectively. But on the upfront as well, we all need to plan. And good enough, 2021 is coming. This is a good time to begin to set your budget for 2021. 2020 hits a lot of people by surprise. There are a lot of unexpected, there are a lot of shocks. The pandemic came, nobody really planned for the pandemic. While some people would have budgeted and have maybe some emergency fund, they would have been able to absorb some of the shock rather than people that had no plan or had no budget. So it's critical for everybody to plan either fiscal responsibility and also on the individual leg as well.
But how easy is it to plan and live according to your budget when you look at the rising inflation, for instance?
Okay, good question. So inflation is something that nobody likes, right? At the moment, things are probably double the prices, and really income has not grown as much as you can. But just imagine if you had never had a budget, and just imagine if you are spending all that is coming in. So with budgeting, you're able to meet certain obligations. With budgeting as well, there are certain things that are not priorities, so those things can wait. So in budgeting, you have your scale of preference, those things that you need to attend to. So there are things that are urgent, there are things that are necessity. So for instance, you need to pay your house rent, those are necessities. You need to pay school fees, for instance, for your kids, those are necessities. So yeah, budgeting helps you to prioritize, and those things that can wait, you might need to delay it. So that's what budgeting is about. Things that are not priority, you can wait, you can allow it to wait, and things that you probably need to scale down on your so for instance, you used to buy something that was premium, and based on your income level, you can't afford those things that are premium. I need to come down on the ladder of that commodity and probably get something that's less expensive but can still meet or achieve that need. So that's what budgeting does for you. It makes you realize what your income is, and now begins to allow you to identify what is priority. And if you need to scale down on maybe a commodity on your choice, then you are able to scale down. So that's what budgeting does for you. Yeah.
Now, just like you mentioned earlier, the pandemic has underscored planning needs. But what are the trends that we have seen in financial planning so far?
Okay. So much has happened in 2020, and is quite a historic year. Sad enough, people lost loved ones, people lost jobs, and people close ones as well. And what we've seen in financial planning in recent times that people are beginning to update some of their estate planning. Some people didn't have estate planning in the past. Now it's quite important that you have an estate plan. And really that's a plan to transfer your inheritance to loved ones when you are gone or you know one, you are no longer around. Some people never had a will, for instance. Now people are beginning to being conscious of having a will, having a trust. What are my plans if I'm no more, for instance? People that used to have insurance, for instance. Yes, the penetration is still low, but people are now beginning to take that more serious in Nigeria. Something happened to me, I think about a year ago, and I had the car insurance on my car, and it expired, and I just kept delaying it. I needed to go and renew my insurance, and just maybe like 2 days before I was going to renew it, somebody hit me, and my car was damaged and all that. If I had an insurance, for instance, insurance would have taken care of the damage, so I had to pay excess. So that's what insurance does for you. It helps you to take some of the pains or some of the headache you would have coughed out a lot of money. Insurance helps you. So insurance planning and estate planning, that's one of the things we are seeing since the pandemic started, and it's quite remarkable. And I think for us in Nigeria as well, these are things that are not big on. I believe in 2021, those are things we need to begin to look at. How do I plan for my loved ones if I don't go around? Are there insurance that can take care of my health? Are there insurance that can take care of my assets? Are there insurance that can take care of my loved ones? So things like that are things we began to see during the pandemic, usually in 2020.
Now, this year, 2020, I mean, has just been a year. I mean, what lessons, in talking about financial planning, do you think that we have learned?
So I think the number one lesson, and really that really sums it up, is one, we need to have an emergency fund. And in Nigeria, really, most people don't have an emergency fund. People just live from paycheck to paycheck, or live from the one salary to another salary. And of course, I can't blame people, right? For a lot of people, salary is not enough. The unemployment rate is quite high, and so our environment is quite peculiar. But I think financial planning is more of a habit, of a habit, something that you start. So people need to have that habit or imbibe it. You need to begin to have an emergency fund. And what is an emergency fund? It's a fund that you set aside for rainy day. A fund that is set aside in case that the unexpected happen. So there's been a lot of unexpected this year. Like I said, people lost jobs, people lost loved ones, people had to go to the hospital that they didn't plan for. So with having an emergency fund, that can help you to cushion a lot of the effects, cushion a lot of the shock, cushion a lot of the things that you didn't plan for. So I think that's the number one lesson. You need to have an emergency fund. Not that you're praying or hoping for bad things to happen, but sometimes we live in this world and sometimes unexpected happens. An emergency fund helps you to take care of those the unexpected. As a rule of thumb, it's generally advised that your emergency fund should be at least about 6 months of your monthly salary. So for 6 months, you are fine and able to adjust afterwards.
But then, what about mistakes? I mean, is it possible to even make mistakes while you're planning your finances?
Oh, definitely, definitely. And some of the mistakes that people make and they can avoid is one, to, like I say, to have little or no emergency fund. So it's one thing to have an emergency fund, but sometimes the emergency fund can be too little. And if it's too little, you might not be able to achieve some of the things that you need to achieve. One is also not even having a financial plan. And I think that is very critical. It's very important you have a financial plan. I did make a quote by Benjamin Franklin. I said, if you fail to plan, you are planning to fail. So you need to have a financial plan, a plan to be able to achieve the things you set out to do. And it's because you don't have limitless income. Your income is limited. So you need to be able to plan based on the income level that you have. Also, insufficient protection. And insufficient protection means there's no insurance cover, for instance. There needs to be a plan, either a life cover, so for your loved ones, your beneficiary, or you're approaching retirement, for instance. You can have an insurance plan that still allows you to be earning income when you're retired. So there are annuity plans, for instance, that take care of that. So if you stop working, but can keep earning income, you need to be able to also review your financial plan regularly. But sometimes you start out to have a financial plan, events change, and that financial plan might not really make sense. So, for instance, you're on a certain income level, and maybe you lost your job, for instance. You need to be able to adjust your plan based on your current income level. You probably even have a salary raise, for instance. You need to adjust your plan based on your new salary, for instance. Because you don't plan for the excess money you have, you might squander it or waste it. So there needs to be regular review of your financial plan. I need to update your wills and beneficiaries. We found out a lot of cases that some people have wills and they didn't update it. Maybe when they had the will, they were not married, for instance, and their next of kin was maybe their younger brother. And so when they die, for instance, and they have kids, they have wife, that will is not catering for their family member because they never updated it or they never updated their insurance plan, their trust plan. So on a regular basis, you need to update your wills and your beneficiaries. And very important, you also have an estate plan. Where there are a lot of people that they had a successful life, a successful business, whenever they plan to transfer their assets or their estates when they passed on. And so all that needs to be put in perspective. And those are certain mistakes that people make when in their financial plan. Those are things that they don't look at or things that they don't focus so much on.
What about those that don't earn a salary? What about the petty trader? You know, someone who just earns what is barely enough to feed. How does such a person have a plan? How does such a person set aside money for an emergency fund?
Okay, thank you. So for people that earn daily, the petty trader, for instance, and for a lot of the petty traders, it's interesting to know that a lot of them are involved in like thrift, in a job. And a lot of them, they do daily savings. So a lot of them already have savings. I understand that the money might not be enough. And that's where also investment comes in. So financial plan is a whole lot. It's not just budgeting. Budgeting is part of the financial plan. But when you begin to invest, for instance, also helps you to take advantage of opportunities. So I'll mention some components of financial planning. And one is having a cash flow analysis. You need to understand your current income level and your current expenses. If you don't know what your expense level is, really, you might be spending much more than you are making, and really that's already putting you in a negative position. You need to even understand what your net worth, and your net worth talks about your total assets, and when you subtract your liabilities. So your assets are the things that you own, that your cars, your real estate, your houses, your shares. Those are your assets. Your liabilities are things that you are owing people. So you've taken a loan from the bank, as a liability. there are certain things you need to pay. Your mortgage, for instance, those are liabilities. So when you net off your liabilities from your assets, that's your net worth. That's the value of what you are worth. You need to understand your risk profiling, for instance. And your risk profiling talks about what part or where I am in the risk ladder. So, for instance, I'm just starting my career. I shouldn't be investing with someone that is retiring. If I'm starting my career, I can take risk. If I'm in midpoint of my career, for instance, I can't take as much risk as someone that just started his career. If I'm retiring, for instance, I can't take so much risk because I'm not going to be earning income, for instance. I need to live on my investments. So you need to understand your risk profiling. What part of the risk ladder do I fall in? What part of the life cycle do I fall in? So that's very important in your financial planning. And emergency fund is also very important as well. You need to be able to set some certain amount of money aside. Whether you're a petty trader, whether you're a banker, an investment banker, or journalist, you shouldn't squander everything that comes into your hand. Even if it's not enough, you need to be able to prioritize your savings, prioritize your emergency fund, because sometimes there are things that are unexpected, like we saw in 2020, which is a major lesson. Nobody saw the pandemic coming. Some people lost their job. They didn't see that coming beginning of the year. And also protection plan is also very important, which is talking about having an insurance cover. Insurance penetration in Nigeria is very low, just about 1%. But in other clients, insurance is big. In other clients, insurance even own banks. So we need to think about that regard as well. Do I have an health insurance? Do I have a car insurance? Do I have a life insurance? And all those things need to be in your financial plan. Insurance, for instance, is like having a spare tire. Nobody plans to have a bad tire or to have an accident, but the spare tire is in case something bad happens, you're able to change your spare tire and you're still good to go. And of course, an investment planning is also very critical in your insurance, in your financial plan as well.
All right, well, I'll thank you for those tips, and we'll see how helpful they will be in the new year. And compliments of the season to you. We'll see you in 2021. Walao Aino is the acting MD at Codros Asset Management Limited. All right. Now, the Nigerian Stock Exchange has been named as the best performing stock market among the 93 equity indexes being tracked by Bloomberg across the world. The All-Share Index recorded its highest return, rising 45.7% this year, as investors' appetite for riskier assets have remained strong due to persistent low yield on fixed income instruments. Investment bank Chapel Hill Denham says equities will continue to outperform bonds in 2021, given the current overstretched fixed income valuations. But now let's check out the numbers from Tuesday's session, where the market resumed trading in positive trading after the Christmas break. But let's talk to Head of Securities dealing at APT Securities and Funds, Mohammed Kayode, to tell us more about Tuesday's trading. Good morning, Mr. Kayode. Thank you for joining us. Now, let me start with your reaction to the NSE being named as the best performing stock markets in 2020.
Thank you very much. I would like to put it straight away that what happened in Nigerian capital market is the policy of the government is the one that favors the equity market because of the low yield in the fixed income market, and that's what's responsible for that. And bear it in mind that globally we are experiencing a pandemic right now. So other indices in the world are not that performing because of that pandemic, and that is the reason why Nigeria is now the best performing stock in the 93 indices tracked by Bloomberg.
Now, let's talk about yesterday's trading now. BUA was one of the market drivers. Any idea what was responsible for that?
Yes, market drivers is always market drivers are always those high cap stocks. You know, our market is value weighted index. A value weighted index index is always been driven by the high cap stock. If you look at those stocks that gained yesterday, you see BUA. BUA is about the third most capitalized stock in Nigerian Stock Exchange. You see GTB, and so on and so forth. So all these stocks, you see them driving the market. So what actually drove yesterday market indices was the high cap stock because of the fact that our index is value-weighted index.
But we also saw interest in some banking stocks, Zenith and Access. Is that solely attributed to bargain hunting, or is there more to this?
Actually, when do you see a well-performing, if you see a Nigerian equity market performing well, what you firstly look at is the banking stock. So when you see the banking sector of aspect of the market is ticking towards the upside movement, you should know that the market is ready to move, because it's the one that leads the market direction at any point in time. So since our market is performing well right now, so if you look at those sectors, you will realize that banking sector also is moving in that direction. Yes, on Friday alone, we have about 7 billion traded in the market. So yesterday also we see something like that it traded in that direction. So what we are saying is this: whenever you see something happen in our market, banking stocks are the one. So are the one that are responsible for those directions, because they are the leading sector of the equity market in Nigeria.
All right, Head Securities Dealing at APT Securities and Funds, Mohammed Kayode, thank you for speaking with us this morning. We'll make an opening call to London when we come back shortly. Just stay with us. Well, let's see how the UK markets are performing after a record-breaking session yesterday. And Juliana Olayinka will be telling us. Good morning, Juliana. Shares in London closed at their highest level in about 10 months yesterday. Was it all about investors' reaction to the Brexit deal? And are the numbers still trending upwards?
Good morning, Bissy. Well, there's a bit of a muted start on the FTSE this morning. It opened up about 9 points higher. At the moment, sterling is trading 0.3% higher against the US dollar. But there are just 2 days left of 2020. So typically at this type of season, it's particularly quite slow. But as you said yesterday, it was a record-breaking day. £34 billion was added to the value of UK listed stocks. And as you said, that was due to a combination of things. Across the pond, Donald Trump finally signing that stimulus bill, the AstraZeneca getting the thumbs up, and of course, finally, investors were breathing a sigh of relief as the Brexit trade deal was coming to an end.
Meanwhile, talking about Brexit now, the bill comes before the Commons today as Boris Johnson makes a speech in Parliament. What sound bites are you getting concerning this?
Well, it's a busy day in both houses today, in the House of Commons and the House of Lords. About 10 minutes ago, Prime Minister Boris Johnson entered the dispatch box to begin what is likely to be a very heated 5-hour-long debate about this Brexit trade deal. We do know that it is going to get the backing from the majority of members in the House. And it wasn't just those who were critics of leaving the European Union. There are also some critiques from hardline Brexiteers within Boris Johnson's own Conservative Party, especially over one of the main sticking points, which was the fisheries. But we have heard that the ERG Tory skeptic, Eurosceptic group within the Tories have given this Brexit bill their blessing. There were some pictures that were just released on British media showing the European President, Ursula von der Leyen, as well as the European Commission President Charles Michel, signing the Brexit trade deal. That is going to be scrambled over on an RAF plane, so Boris Johnson can finally sign it after the vote takes place, which I believe is going to take place about 2:30 p.m. local time. It will then be passed over to the House of Lords. A couple of members within the House of Lords not really happy with the Brexit deal, but alas, it is a deal, and we literally are just 1 day away from the transition period. It will then go to the Queen to sign for royal assent, and then Brexit has been done. So it is going to be very busy. There are going to be lots of different, revelations coming out of the Brexit bill. It was just published today. It's 72 pages long, and so there is going to be lots of scrutiny, but it will pass. We are expecting to also hear from Theresa May, the former Prime Minister, as well as about 84 other MPs, so expect lots of sound bites from there. I do have a little very brief statement from what Boris Johnson is expected to say in front of House MPs today. One of them being is what we thought was not a rupture, but a resolution of the old and vexed question of Britain's political relations with Europe, which bedeviled our post-war history. So expect some Churchillian, Etonian, Boris Johnson populist statements coming out about the future of Britain in this new, pretty historic, monumental chapter, which is going to be opening in a couple of days' time.
All right, Juliana, we'll be waiting for you to tell us how all of that is going. Now, with the record cases of COVID recorded yesterday, it's not a surprise that millions more in England will be facing tougher restrictions. But then the UK has given the Astra shot a nod. So how is this lifting everyone's mood right now?
Well, it's difficult to tell. I think the mood is pretty dim, although, yes, it's another a historic moment. The Oxford AstraZeneca vaccination has been given the thumbs up by UK regulators, and the Health Secretary, Matt Hancock, has said from the 4th of January, this vaccine will begin to roll out. It is a huge story, huge news, especially because, as you said, Britain is really battling with COVID-19. So many local authorities up and down the country have said that they're in a state of emergency, that there are just too many patients. In fact, thousands, tens of thousands of patients, more than in the first wave in spring, who are currently in a critical condition with COVID-19. Yesterday, a further 56,000 individuals tested positive. Another 441 people died. There are so many questions as to whether we are going to go into a third national lockdown. The scientists and health professionals are saying even in a tier 4 restriction, which basically means everything is closed, it's just not bringing down the infection. So we are expecting potentially to go into a third lockdown in the new year. Schools are supposed to be opening next week. That's been completely scrapped. We're expecting after this entire Brexit debate, which is going to take hours upon hours, the Health Secretary to give an update on these new tiers, and we are expecting much of the rest of England at least to go into these tier 4 restrictions, or perhaps even more. There have been some sources suggesting there could potentially be a tier 5 and that there could be a curfew across England of 8 p.m. I think that's probably a little bit of fake news, but we do know that the tier 4 isn't going as far and as high as it could. But yes, the Oxford AstraZeneca announcement today is still giving us a glimmer of hope, but I don't expect this to get us out of the position we're in until at least spring.
All right, Juliana, thank you. We'll see you again at 1:30.
Thank you.
And now let's make a quick stop at the fixed income market, and the fixed income dealer at Access Bank, Akpewe Oputu, joins us now to make sense of the trading day. Good morning, Akpewe. Thank you for joining us. Now, today is the last primary auction for the year. What are your expectations from it?
Good morning. Thank you for having me on the show. Yes, there's actually a total of 74 billion on offer at the last NTB auction. We expect to see yields trend slightly higher than where they closed at the last auction, because the volume on offer last time was just 7 billion, and now we have a total of 74 billion on offer. So we expect to see more subscription at the auction, and we expect to see rates trend a bit higher than where they closed at the last NTB auction.
All right, fixed income dealer at Access Bank PLC, Akpewe Oputu, thank you for your time. And that's where we wrap up today's show. Thank you for watching. I am BC Adebayo.